See. Hey, John. I was talking to you, but I didn't realize I wasn't live. I was saying I hope you're on top of the water. And I was also suggesting that that guy that is your client. I mean, you're a client of out of Palm Springs. Maybe he'd do an interview and maybe get some customers. Who knows? He'd just have to give me a monster box. No, just kidding. Hey, everybody. Hey, Carnegie's Painter. Hey, Susan, Narad, Dan, Minecart. So anyway, I do need a haircut. Thanks for caring. I do need a haircut. I just got back from visiting my tomorrow is my dad's birthday. He's dead, but it's my dad's birthday. So I was invited out. Actually, the first time since he died, I got to see my brother, my stepsister, whatever, my sister-in-law, I guess, and 3 nephews, my sister, and then my stepmother. So anyway, on the way home, I was looking at the market, and apparently we're going to crash tomorrow. I personally think what's going on here, you can read the headlines if you want to, and you can believe what the headlines say if you want to. But I think Wall Street needed an excuse to rotate out of some of the most overpriced stocks in the history of mankind. The MAGA 7, way overpriced. And so, but they didn't want to get out while their buddies were in it. Well, now they've got an excuse. And even if their performance ends up not as good as the rest of the managers, they can say, well, you know, it was Trump. Trump's unpredictable. Oh, it's Trump. Oh, it's the tariffs. I don't think the tariffs are what's causing this sell-off. It's the screen they're hiding behind. The markets were already going down. I mean, you had Apple, I forget what the ratio was, 70 times earnings, and multi-trillion dollar, $1.5 trillion stock, whatever it is. And their earnings are growing by 2 cents. They just want it out. And they want to go into gold and silver. Now you have a better argument from the front pages of concerns on geopolitical risk. Yes, there's that. But I think what I'm seeing here, when I was your age, on a Friday, I was meant to go to Boston. I think I did go to Boston. I had a girlfriend. But before I went, we had this technical analyst, Lobsher, Harry Lobsher. Lobsher, hello. Lobsher, hello. Oh, yes, Billy. What stock is it? Let's see. We counted 1, 10, 9. Well, it looks like it could pull back to 10, but it's as strong as 1, 2. And you should see a move that you have nothing to worry about until it gets to $22. Thank you, Harry. Anyway, Harry came on to the whole system, and he gave us a bunch of names, and I had some of my own. But he said, call your clients and put in some orders. He said this is a once in a lifetime opportunity, probably once in a cycle anyway. Put orders in. I'll use an example right now. I mean, I don't know how you can trade the indexes. It's so annoying. And I've never traded this ETF. But there's an ETF out there that I looked up, the VanEck Semiconductors ETF. I got to put my chart on 5 years. And that thing has been very strong. And obviously it's got NVIDIA, but it's got Intel and it's got other buddies in there. But there's a chart out there for 5 years. Tomorrow you could put an order in. You can pick your own number. You put an order in to buy SMH at 150, or maybe even 140 or 145. Personally, I'd probably do it at 155 or 160 to make sure I got it. But that stock was 210, 216 last week, and now it's 180. And if we do get a sell-off tomorrow, you may be able to pick that up in a panic selling at 150, 155, 160. It might go below it. You pick the number. That's one idea. I think SMH, if I'm right about where the market is going to turn around and have a blow off top, you can double your money on that one. If I'm right. It's very risky. But this panic that's going on out there, these headlines, these are Wall Street pros wanting to take your stock from you. Most of the trades on Wall Street are computerized. 98% are traded by computer. And you'd be correct to point out, well, obviously, if I give my order in to E-Trade, it just goes into a computer. Yes. But most of this is just computers talking to each other. There is rotation out of some of these high price stocks. It's just new leadership. There's going to be panic. There's going to be hedge funds blowing up because they're all leveraged up like geniuses. But I think I could be wrong, obviously. But I think Tuesday morning, if it doesn't happen sooner, Tuesday morning will be the lows. It might be tomorrow. And I don't think it's the tariffs. There may be a hedge fund or two blowing up, and they'll get rescued. They will get rescued. Trump came out and said, well, the markets are going to have to take it for a while. I agree with him. But I mean, there's some question whether the Fed is already easing, but I think the Fed will step in. It's my opinion. For what it's worth. Now let's go to other people's opinions, if there are any. U.S. equity futures are opening, this is Tyler Durden, around 3% lower, taking the total loss since tariffs to around 15%. Again, you'd have more strength if that sentence said the unpredictability of what's going to happen. But the tariffs in and of themselves, they're not that bad. Everybody's money was in the United States markets. Everyone was in 7 stocks. They needed an excuse. They want your stock. They want to have an excuse so that when they're wrong, they can blame it on. Bitcoin is getting hammered, which of course is one way of testing how strong that is as an alternative investment. Looks like bonds are getting some strength. Crude is down, gold is down, copper's down 10%. Currencies are down, commodity currencies. Neil Dave from Goldman Sachs, Hong Kong, says, I'm quite frankly stunned at how quickly things unraveled this week. There is no other way to put it, but the dynamic shift in the macro landscape, macro being the 35,000 foot level, has put us in a precarious position for the coming quarter. Perhaps the surprise factor was high because there was a feeling that reciprocal tariffs would not be as bad as thought, and the market would look at this event as just a hurdle. If there is one positive takeaway, blah, blah, blah. All right, so then they show some more charts. The world is feeling the pain. A lot of things going down. Credit, global commodities down. Another trader said, quoted, I can't bring myself to short this market. I know all the reasons it's going down. We've betrayed our allies, screwed our trading partners. The world hates us. Trump is orange. Tech companies are going to get fined. DeepSeek valuation, yada, yada, yada. The 12-month forward priced earnings ratio is around 18x on the S&P 500. It was 14x at the 2018 low and 15x at the 2022 low. And then this trader said, the minute I get short, he's going to screw me just like he does everyone with some policy U-turn that rips my face off. That's what I think's coming. I don't know what day. If I had to guess, you see the lows Tuesday morning. And then you're just the computers will go the other direction. The absolute level of volume here, that makes hedging difficult. That's true. It's too late to, I think, I mean, obviously I can be wrong. It's too late to play the downside. And I give credit to Lion of All Trades and the gentleman who said that Christians are calling for the S&P to crash this month. You two guys have been right. Yeah, there are some capitulatory signals. I think there'll be capitulation. If I had to guess, it'll be Tuesday morning. It could be tomorrow. And also the futures could turn positive between now and when the market opens. I really don't think this is all over with. Vietnam, Taiwan are going to if Trump agrees, they'll remove all U.S. tariffs. That's 2 countries. Apparently 50 countries have reached out to the president looking to negotiate. Let's see what's happening in China. China and Hong Kong returned from a long weekend in observance of the Qingming Festival, a holiday which has in the past prompted poets to compose their grief regarding the lingering cold in spring and emotional moments while mourning the deceased. China retaliated. Okay, we know all that. China-related ETFs sold off Friday after hours. KWEB, FXI, MCHI, and ASHR all down between 4 and 9%. The People's Daily published an opinion piece late Sunday night saying, and remember, they've already had their Sunday night, saying monetary and fiscal tools, rate cuts have ample room and can be pushed out at any time. China could implement further domestic policy easing. There's a bunch of stuff. A drizzling rain falls like tears on the mourning day. The mourner's heart is going to break on his way. Where can a wine shop be found to drown his sad hours? A cowherd points to a cot mid apricot flowers. It's poetry. Glad poetry is better in Chinese than it is in English. All right. All right, let's see what I haven't read this. This is Martin Armstrong. He received a question today. Marty, I just had to write. While everybody is blaming Trump and tariffs for the stock market crash, your computer predicted it in advance. I was at your conference, and nobody comes close to your ability to forecast. So anyway, then he replies, this is Martin Armstrong, thank you. What I discovered was that we are all connected globally. Over the years, many people have come to encourage me, from John Exter, Milton Friedman to Margaret Thatcher. I believe the world would be a better place if we just listened for once. Maggie understood cycles, and that's his whole computer is about cycles. As we head into an economic decline worldwide, bottoming in 2028, copper prices have declined because of a combination of factors influencing supply and demand. No kidding. Reduced demand, blah, blah, blah. Overproduction has been an issue in mining operations. All right, this is all about copper and a stronger dollar. Boring. There is hidden order within the appearance of chaos. Once you see the pattern and the order, you can never see the chaos again. Yeah, it's mostly about why is Trump using tariffs? All right, this looks like a better article from Martin Armstrong. For all the criticism of Trump and the risk of a global trade war, as Macron wants to unleash a trade war to elevate France to the top of the EU, if we just look at the data, we can see why Trump has taken this approach. Even those Republicans like Rand Paul joining the Democrats in calling tariffs a tax, which I'm sorry, that's what they are. They're a value-added tax. None of them are looking at this issue objectively or seriously. Under the Biden administration, not only was there a wholesale invasion of illegal immigrants, but on the trade front, Biden paid no attention at all. And most seem to assume he was too senile to do so. They are resoundingly calling Trump insane, mainly because they have something to lose. Free trade has been one-sided. Free trade has been one-sided. There is a risk that France will push to impose trade barriers against others to support their Marxist agenda. Anytime somebody brings up Marx, they lose the audience. That will be devastating, but we see the world economy headed into a recession in the United States, yet a depression for the European Union. The fact that Trump imposed a 10% tariff on the UK, but 20% on the EU, is actually driving a wedge between Starmer's dream of overruling Brexit to get back into the Marxist utopia of the European Union. In addition, the belligerence of Macron is having an impact. There is a growing discontent with the European Union and the 20% tariff on the EU, with Macron vowing that full retaliation may prove to be the wedge that starts the fragmentation of the EU. Hungary, for example, has its own currency and can quickly leave the EU and resume trade with both the United States and Russia. Ukraine has long suppressed the Hungarian people trapped within the boundaries of the Ukraine. The same is true for all of those members questioning the EU. Yet did not join the euro. That's bad. Don't know what he meant. While all we hear is how the Smoot-Hawley tariff caused the Great Depression, that was total fiction. Here's the chart of U.S. tariffs since 1784. Do I have to show that to you? I guess I do. Here's U.S. tariffs. U.S. tariffs since 1784. Most of the time we've charged tariffs, except recently. The Smoot-Hawley tariff was on agriculture in 1930. The socialist economist omitted the sovereign defaults, the government defaults on debt of 1931. Governments who defaulted included Canada, Europe, South America, and much of Asia. The causes of the Great Depression have been debated for decades. The problem with all this analysis is the same attempt to reduce the cause to a single event. In school, we read The Great Crash by Galbraith. He was a socialist, so he blamed the corporations and never bothered to mention the sovereign defaults, the governments who defaulted on their debt, of 1931. For that would have accused the government instead of the private sector. Then there is the argument that tariffs at least contributed to the Great Depression. If they were the leading factor, this would again focus on business versus government, because this disregards sovereign debt defaults. Smoot-Hawley, this is interesting, Smoot-Hawley was not signed into law until June 17, 1930, when stocks had already taken a nosedive from the September 1929 high. Cato Institute's Alan Reynolds argued that Smoot-Hawley was an ongoing drag on the economy, and that it was, in fact, a substantial contribution to the stock market, arguing that traders saw it coming and acted in anticipation. This argument, on one hand, correctly states that traders acted in anticipation. Still, it incorrectly adopts the position that, but for the tariff issue, the stock market would have continued higher anyway. I read that badly, I guess. The pretense that somehow the Smoot-Hawley tariff created or contributed to the Great Depression, ignoring European sovereign debt crisis, is really a specious argument. This ignores the entire issue of tariffs, which predated the Smoot-Hawley Act. The Emergency Tariff Act of 1921 was a stopgap tariff measure that was rushed out and put in place until Congress could deal with the issue. The Republican Party wanted to quickly reverse the low rates of the Underwood-Simmons tariff of the Wilson administration pre-war. Protectionism had never died out, but remained merely dormant on the back burner during World War I. After the war, the supporters of tariffs based their arguments on economics and nationalism. They argued that the economic prosperity during the war, as America produced food for Europe and goods, that the prosperity unfolded because there was no competition for imports. Therefore, the abundance of exports created the economic boom, which is the German export model today. While on the surface this was correct, they overlooked the problem that Europe could not produce during the war, and therefore American production sustained Europe. The dominant argument was that the war had ended and European imports would increase, threatening the current economic prosperity in America. This is 100 years ago. All right. I'm going to skip that whole. Move on. Nationalism was on the rise. League of Nations, emergency tariff, Fordney-McCumber tariff, Payne-Aldrich tariff, Underwood-Simmons tariff. Smoot-Hawley has been criticized as a major cause of the Great Depression, with no mention of the tariffs that predated Smoot-Hawley. The tariff issue was by no means something that was scaring the stock market. The trend from 1927 to 1929 was a significant shift in assets from bonds to stocks, as hints of European debt crisis appeared on the horizon. The smart money began to see that the real crisis was debt. This is a serious problem, for even today, the debt to equity ratio has varied between 7 to 1 and 10 to 1. With only a tiny portion of only a tiny portion of smart money begins to shift to equities, this becomes a bottleneck, and what happens is prices rise exponentially, meaning prices at least double. This is not really asset inflation, where assets merely rise in proportion to a decline in currency. This is a shift in capital whereby it concentrates into one sector and often one country. Irving Fisher was a prominent economist of the day who lost his credibility, I remember that, when he said the market, I wasn't there when we studied it, said the market had reached a new plateau and thus would not crash. Part of his reasoning was the shift in capital from bonds to equities. All right, we'll skip a bunch of that. In 1927, it was in 1927 when there was not merely a secret meeting of the four main central banks who conspired to lower U.S. interest rates in the hope of deflecting the capital flows back to Europe, but also the League of Nations World Economic Conference, which met in Geneva that year. At that conference, it was officially concluded the time has come to put an end to tariffs and move in the opposite direction. The resentment towards Germany was really too great, particularly for the French. This was despite the fact that the German government had been overthrown in the 1918 revolution, which created the Weimar Republic. The reparation payments imposed on Germany led to the revolution of 1918 and the overthrow of the German emperor. These payments could only be made through gold, services, or goods. The German people were being punished for the actions of political leaders. France broke ranks and began in 1928 enacting a new tariff law and quota system. This was targeted at Germany. If they could not sell goods internationally, Germany, then they could not make reparation payments. This would eventually lead to proposals to allow Austria and Germany to merge in 1931, to which the French began shorting German bonds in the marketplace. The punishment of Germany led to the rise of the History Channel. They failed to distinguish between the previous government and the German people. The economic shift in trend due to the innovation of electricity combined with a combustion engine had drastically altered the economy. He's talking about the United States. In 1900, about 40% of the workforce was employed in agriculture. By the late 1920s, the United States economy had changed remarkably. There were exceptional gains in productivity because of electrification, which increased production of goods, and the combustion engine, which altered agricultural production. With tractors replacing mules, up to 25% of the agricultural land had previously been used to feed horses and mules. His writing is not perfect. This land suddenly became available to produce crops. The ability to produce food soared and exceeded market demand, creating what was called overproduction and underconsumption. This is what Senator Reed Smoot, who was a Republican from Utah and chairman of the Finance Committee, and Congressman Willis C. Hawley, who was a Republican from Oregon and chairman of the House Ways and Means Committee, were focused on. They listened to farmers who wanted high tariffs to prevent competition. Neither Utah nor Oregon was an industrial state. Smoot-Hawley was to protect farmers from falling prices. Not so much from imports, but because the United States was in overproduction of agricultural goods. Anyway, because of World War I and the wholesale destruction of the European economy, the United States was still running a trade account surplus. We don't anymore, as manufactured exports of goods were rising rapidly. Therefore, Smoot was looking primarily at food exports, which had been declining as Europe found it easier to restore agricultural production. That was easier than to manufacture goods. This goes on way too long. I'm going to go to the bottom of this whole argument. I'm just going to read this last paragraph. This goes on for pages. All right, let's just go to this last. All right, I'm just going to go to his last two paragraphs. I just skipped about 10 pages. To argue that the tariffs were even a significant cause of the Great Depression is really ridiculous. And a man in my position can't afford to be made to look ridiculous. It was the product of Democratic propaganda to blame Republicans for everything. That sounds like today, which worked in the end. The real cause that wiped out the world economy came from government debt defaults, sovereign debt defaults, because these were sold in small denominations to the average Mr. Q public. Those who believed that the stock market was risky bought the bonds and ironically suffered a total loss of their investment. The Dow Jones Industrials collapsed by 89%. Do you see where I get my number from? The bond collapse was 100%, and they never got a return. The collapse in debt saw American municipals also suspend payments. The city of Detroit suspended debt payments in 1937 and resumed in 1963. The collapse in the bond markets was far more serious than the tariffs. Wow, that was a long article. That's the point. Until the bond market collapses, the stock market's going to turn around and go back up. All right, let's see what else you guys are talking about. Breaking, stocks in Japan have halted after hitting circuit breaker during panic selling. Guys, the panic selling, if you have stocks in mind that you like, just go out and buy them under the market. Put it in order under the market. When this snaps back, you'll be able to make a quick trade or hold it. Let me see what you're reading. Let me see what you're reading. Japan. I don't see the Japan. Let me just hang on. Hang on, relax. Let me just see. Stock futures plunge. Trump says markets may have to take the medicine. Analysts say stocks have ample space to keep selling off. Gold and silver are up. China market just opened with a 10% loss. See, China, and I'm not saying it can't happen here, but China's having potentially, I don't know if my information is any good, but China could be having credit defaults, a contraction in credit. And that means depression if it gets big enough. And that means stock market coming down. What am I doing at this time? Yeah, gold is going up, silver is going up. Look, everything's breaking apart, and it's going to cause. I just at this dinner I just went to out in Virginia. Everybody's talking about their 401ks being down. Well, the 401ks were up on 7 stocks. And so people don't quite understand that. And of course, when Trump, his first administration, highlighted 401ks, they made fun of him. But it's going to hurt. It's going to change people's perception of their wealth and their predictability. Augustine, if I had money, I would make a list of, and I just don't know. I ask people, nobody tells me. It's like stockbrokers don't trade anymore. But there used to be an option called the XMI. The XMI. It doesn't trade anymore. And then there was one that we would trade Oxy, OXY. I don't think that trades anymore. So I don't know which ones. But if I had money, I would go in under the market tomorrow and Tuesday and buy calls, buy stock, more importantly, under the market. But if you don't have a lot of money, I don't. Calls might be an alternative. I think when this thing turns around, we're going to snap right back up. And by the September, October, the Dow could be at 50 grand. It could be at 60,000. That's how I see it right now. So I see this as a buying opportunity. It doesn't mean I'm calling the exact bottom. I was wrong last week. But this correction was already in place. This is something they wanted to do. They're just using the Trump tariffs as an excuse. China was already in trouble. That's how I see it right now. What am I doing? I have a small position in those 2 stocks, very small, GBUX and Nixie. I forgot. I have slightly over 300 shares in GBUX and slightly over 1,000 shares of Nixie. I mean, will those stocks go up because of this? Will any news that comes out on those cause upward movement? I don't know. Will prime brokers being in trouble with liquidity cause them to pull back on this naked short selling? I don't know. We'll find out. My guess is both of those stocks will be under pressure tomorrow and Tuesday. I hope I'm wrong because I own them. It'd be nice to be able to buy some under the market. I do own Railtown a little bit. I have more of that than those, but it's easy because it's a 30-cent stock. I hold Railtown. I don't think this is going to stop Railtown from there. Let me see if I can find this one bit to show you. There, maybe that's it. Yeah. This is this guy Alcher. Cash in on AI buyouts. If you want to make a big, fast fortune on Wall Street, get into the world of high-level mergers and acquisitions. With just one good buyout deal, you could be set for life. This guy, this is a promotional piece. I'm sure you can find it all over the internet, but he wants you to subscribe to his ideas. A friend of his, ideas on AI stocks. But the message I want to give to you is that AI buyouts still is where there's a lot of interest and activity, and you're going to see M&A, and they're going to pay up for those, I think. GBUX, no, don't give up, Augustin. I'm not saying give up. Look, let me say it differently. Tonight, when I'm coming home, I'm looking on my news. I saw the markets are down. I'm not surprised, but if you had talked to me Saturday morning, I would have predicted the markets would be up or could be up. Because obviously you have to expect that the sell-off continues. I think there's a hedge fund in trouble. There's got to be, probably more than one. So the sharks will get the stock prices down so that that's how they make money. They'll buy it while these poor guys have to sell out. They're all over leveraged. But man, when it's over, it's called capitulation. You guys don't see capitulation because the criminals just keep selling. They never capitulate. You're going to see capitulation, I think, tomorrow morning or Tuesday morning. Could I be wrong? Yes. But this kind of energy, this worldwide panic, this worldwide, oh, it's Trump, he's fat, he's orange, he's insane. At least he's sentient. I said that at the table. It didn't go over very well. But at least Trump's sentient. The last president, he didn't even know anything was going on. This is all theater. They want to get out of these shares, of these high-priced stocks. They wanted an excuse. That's my opinion. And then China's been under pressure for a while. So it doesn't surprise me that the markets are down 10% in China. And the banks, they don't want this over with so quickly. So what's this going to do? It's going to put huge pressure on Trump and the Fed, which is owned by the banks, to come in and bail everybody out. I mean, could the Fed lower interest rates 1% in an emergency meeting? And then the market gaps open the next day? You know, we've gone from good news is bad news is good news, to bad news is bad news. As soon as the Powell put is reinforced, bad news will be good news again. And it's kind of how I see it. What does China's economy mean for Finger if it crashes? Well, I think China's economy already has crashed. Now, of course, you can only type a short question. I guess you're meaning their stock market. There's some risks. The risks, I think, are, I mean, Moody, there's some, we can go out on the ledge with risks. I mean, two that occur to me. One is that Xi gets replaced, and then whoever's in the decision making might decide not to do those contracts. How likely is that? I don't know. Probably not that likely. The other thing is, if Xi decides to retaliate, it's in all the headlines, by not allowing Chinese investment in the United States, you come into some interpretation of, well, what kind of company is Finger? They do business in China, so you'd invest in that. I don't know. Those are two risks sort of out of the box that I can't measure. But what I actually think will happen is the Chinese government does not want a problem with its population. I think they're going to open the floodgates and prime the pump. QE. And that means more government spending, and that means more vehicles, that means more loans, maybe support for it. I think that could all be very good fundamentally for Finger as it relates to the C2 contract. It's that's sort of a contrarian way to look at it. But could Finger go down tomorrow? Sure. Everything, guys, there's no rationale in a panic. None. That's why Finger might be a stock that you put an order in under the market. I don't know. Let me look at the stock chart. You know the shorts are going to try to destroy it tomorrow. They'll try to gap it down. But I think it'll be a chance to buy. Now you already own Finger. All right, this is giving me advertisement. I mean, Finger looked pretty good as of Friday. It looked like it had tested support, I don't know, 1, 2, 3, 4 days, and it closed on the high, and it looks like it's going to go higher. But tomorrow's not going to be a pretty day unless things turn around in the middle of the night. And it's possible Finger Motion will get hit, but it's all part of this panic going. It's all part of this. This is what happens. Is this the final sell-off before there's the total wipeout? I don't think so. So I think it's going to end at some point. But if you wanted to put an order in under the market to buy more shares of Finger, 118. See, I can't quite read how low that is. But, $1, 98 cents, 95 cents, 90 cents in a spike downward. What capitulation is there's just this animal selling. There's this panic. Everybody sells. And then it stops and buying comes in. The capitulation is just get rid of it. Just get rid of it. Throw the baby out with the bathwater. Throw the bath out with the baby. Throw the water out on top of them. Just get rid of everything. Get it out, out, out. And once it's gone, they can't sell anymore. Can't throw anything more out the window. And that's capitulation. And that you could see that tomorrow. On the other hand, finger is not related to this overall selling. This overall selling is just the overpriced stocks that all these money managers are in. So it may be that tomorrow finger motion shows strength. It's just it's hard to call, but if you want to take advantage of a panic tomorrow, you might get it tomorrow or Tuesday morning. On the positive side, to the extent that there are huge loans out to carry the non-delivered shares in the prime brokerage accounts, you could actually see buying in finger shares to settle trades, just to get money out of the accounts sitting there tied up. So if finger motion sells off tomorrow or Tuesday, I don't think it'll stay down. I don't think it'll stay down there. I could just as easily see finger motion opening up tomorrow because there's buy orders on the shorts that, hey, you got to come up with money. And they don't have any money they're going to put in. So I could see the stock up tomorrow as well. That's not a very good answer, but I think finger motion traded pretty nicely on Friday. At least he's not President Autopen or Marie Le Pen. I'm wondering why Trump hasn't said anything about the short sellers. Could he be crashing them? You're not going to get me to switch. You're not going to get me to switch. I don't think the tariffs crashed the market. I think the market was breaking down and selling off, and it's the end of the first quarter. All of last year and earlier, but all of last year, the MAGA 7 trade was getting long in the tooth, just to focus on one part of the market. But the 25,000 brokers at Merrill Lynch, the 22,000 at Morgan Stanley, and then all the wealth advisors, let's just put it with NVIDIA. Oh, they've got a chip and it's faster, better, and it's great, and it's gonna, it's gonna do everything. It's gonna clean the ocean, get rid of climate problems, find new energy, solve the patriarchy. This is a great chip. So they run it up, and then everybody's in ETFs that reinvest, they're in funds that reinvest, their 401ks that reinvest, and they just keep it going. And if one of these managers or brokers actually has a brain and has some courage and steps outside of that paradigm, if it keeps going up, so they don't get out, they don't step out, they stay on the train. And I've been saying for months, if not over a year, that as you come around the corner of 2025, we're moving to the commodities. We're moving to resource plays. But it'll take, it takes time to create a safe environment to tell your client, let's get out of NVIDIA. And now every client that the brokers call or the advisors call on Monday are going to say, sure, let's get out. Where do you want me to put it? Well, let's just put it in the treasury market for now and see how everything works out. And then I'm going to come back and I'm going to tell you to buy gold. What? Gold? Less than 0.5% of Western financial assets are allocated to gold and mining shares. There isn't an advisor out there who could keep her job if she overloaded on gold or mining shares right now, as of Friday or as of a month ago. But now, with this kapow, they can do it. Look, guys, this is just, they also want to get your assets. Remember, Fink never has enough. Black never has enough. Cohen never has enough. Griffin never has enough. They want it all. Goldman Sachs never has enough. And I'm sure you can throw in some other names, like Morgan Stanley. Used to be a guy named Mac. I don't know who does it now. Well, the capitulation, yes, that a big part of capitulation is margin calls. Absolutely. I expect a lot of margin calls on Monday morning. In fact, I think there's probably some hedge fund we don't even know the name of who's going to get blown up. And we'll find out about it Tuesday morning in the news. Alan, the one thing that could change is overnight. I've seen this before where overnight, all this selling in China, it can reverse. And then by the time our markets open, the futures are flat or up. I don't think that's going to happen this time, but I think we're so much closer to the bottom here in terms of time. We are, in my opinion. And I'm not sure we're very far away from the bottom in terms of price. This has been a heavy correction. In fact, I bet it's a bear market in some of these markets. But there's so much liquidity in the system. The bond market still is there. At least in the United States, we haven't seen a lot of, well, as I'm talking to you, I'm looking around at all the commercial real estate that seems to be under stress whenever I, go out and about, as they say, and out and about, as they say in Virginia. But anyway, our bond market's still there, at least for the time being. I think it's far more likely we're going to turn around and go up than go too much lower. I mean, if you go with that tired analogy of a rubber band, I mean, they might be able to pull it back a little bit further, but it's going to snap or it's going to rebound. Will it be Black Monday? No. No, I don't think it'll be Black Monday. Um, uh, Tuesday could be black. Tuesday could be black. But Tuesday's gone with the wind. Tuesday's gone. Yeah, Tuesday could be black. I don't think it'll be tomorrow. Could be. Don't get me wrong. I mean, I'm making predictions, which is a foolish game. But I think Black Tuesday makes sense to me. I don't know about Black Monday. You could find that tomorrow, after a down opening, is just Dullsville. There's going to be, it was a long weekend at some hedge funds. It was a long weekend at the back offices of many brokerage firms. A lot of so-called wealth advisors have never been through anything like this. Phones are ringing, emails. And Monday could just be a little bit of shock as these people decide what to tell their clients. Monday could also be, hey, you have a margin call. If your client doesn't bring in $20 million, she's wiped out. And you're going to get a day. Well, I don't know about on the institutional side, but on the retail side, you're probably going to get a day or overnight anyway to talk to the client, for the phone calls to go up to regional and national and come back down. But you're not going to get much longer. And then Tuesday, if Tuesday opens down, regional's going to say, screw it, just get us out of this position. We'll worry about the losses later. So I would say Tuesday has more likelihood of being black than in the sense you're using the word, than Monday. I'll find out. China has 73. China has 73 million ounces. They just bought more for the 5th month in a row. Yeah, China's buying a lot of gold. But one thing, if China has a debt problem and China's markets blow up and there's panic and all that, I can see a situation where China has to sell gold. And that would be really interesting. That would convince me that the Western financial markets are still powerful. Buying a VIX call, I personally think it's too late. I don't own any, but this is a classic example of, and I agree with Ham on this, buying something when nobody wants it, when the waters are calm. You don't want to be buying when the waters are all roiled up and the waves are going and the hurricane's coming in. Yeah, you might buy a wave that goes higher, but at the same time, the hurricane might veer one direction and the waves all collapse back down. The best time to buy something you like the idea of is when no one else does. And the VIX is a perfect example. I don't have extra trading money, but it was pretty clear that we were going to have some volatility. So maybe that would have been something to buy. what I see right now isn't the VIX. If I were going to buy a call tomorrow or Tuesday, the SMH, a call on the SMH, call on, I just don't know how to do it. If I could buy a call on the S&P, I would. Can you buy one on the SPY? And I would buy 3 calls on anything I was looking at. Why? Because if it does snap back and all of a sudden it's up, I'd sell one to get my original money off the table. Then I have 2. And then I sell one of those if it keeps running. And I've doubled my money. And then I have one, I don't care what happens. But if it really goes, make a lot of money. The Australian markets. Look, Australia is just a big commodity. It's the source of uranium, iron, you name it, for China. And China's in trouble. And look, what's funny about me talking this way is everything that's happening right now, I think is going to happen. It's impossible to pick time. In fact, it's impossible to predict anything. But I think the stock market is still going to have a Weimar Republic-like blow off top. Well, that doesn't make sense. The paper's saying this. It doesn't. When you talk about what the stock market's going to do, it's not the news. It's not the news. They add the news after the move happens. It's not the news. So anyway, I think that's what's going to happen. But it's weird. After the Dow maybe gets, here's the numbers I wrote down. Yeah, Dow 55,000. I think the Dow could go to 60,000, 65,000. But let's say the Dow goes to 60, rolls over. After that, I think everything you're seeing right now will come through in clarity, and the markets will be down. Now the Fed will try to hold it up, and the other central banks. So maybe it won't be in a straight line, but from that high, I think the market's going to be down 90%. Not in a straight line, but it'll be scary. And it'll be for these reasons. These reasons you're coming up with and that are in the paper, it'll be then. I just don't think it's now. But man, it's a speculative call, isn't it? We knew the market was a balloon, yeah, but it's still overpriced, which is a funny thing. Just remember this: if I'm right, and when I say I get my ideas a lot of different places, so it's not about me. It's more about naming my idea, so you know what I'm talking about. I take the blame for it. I don't want to blame anybody else. But if the market does go to 60,000, 65,000, and then collapse, you'll talk about it being a balloon. But if it goes that high, first, everybody's going to be saying to me, "Oh, it's going to go higher. It's AI, Trump. It's Trump. It's Trump. It's Kamala Harris is coming back. AOC is going to be the senator from New York." It'll be some reason why it's going to keep going up. I don't know why my nose is itching. Yeah, you got to buy silver. You got to buy silver. You got to buy silver. It's only one asset to own 1 year. when you're owning more than one silver. It's the one asset to have when you're having more than one silver. It'd be great if Trump announced no shorting stock for 90 days. Well, they always do that. It's an interesting idea. I think the way the computers are set up and regs show effectively retail can't short anyway, unless you have a lot of money. So it's all an institutional game and a criminal game. And they all do it high frequency trading. They all have the F3 button that Goldman Sachs came up with. I think if he put out an executive order to stop shorting, they just mark their tickets long. That's what I think. And then get fined 3 million in 6 years for shorting $3 trillion worth of stock. I think Railtown's going to be fine, but we got to admit that if investment banking gets in trouble, but I think that's going to. All right, here's Big JR. I've said they will wait until Trump's in office to craft. Yeah, Big JR. And I think you have said that. Should have happened a long time ago. Oh my gosh. See, guys, the leverage is 53x average. The reason I think this is going to stop and turn around, he can't, it doesn't mean it's going to work, because if you let it go too far, people panic and they start selling, and everything, you get to the point you can't stop it. But I think that they cannot let these hedge funds go down. They're too big to fail. You got to bail out these greedy bastards that leverage 53 to 1. You can't even get a loan to pay 1 month's mortgage from the government. These guys get loans 53x. And then when it's in trouble, they turn to you, the taxpayer, who's trying to keep your house, to bail them out because they're such bloody geniuses. All right, let's see what John says. Thank you, AMG, $15. Thank you very much. I appreciate it. It's very kind. It's good to see you again. SPXU. All right, so he has SPXU. There must be an SPX something else. See, I'm embarrassed. I don't know how to play calls on an index. I'll Google it tonight. Oil under 60 for the first time since 2021. Doesn't surprise me. Now, if we go to war, oil will be over 600 in the first time ever. Everything's going to be unpredictable. No, I wasn't upset. I don't know. Gold is shooting up. Stocks in Japan halted. Easy. That's amazing. Yes, Donna, all tickers would. It's not, Donna, don't, well, I could be wrong, but I don't think this is the big one. Um, so I would be, like I say, let me see where Intel is trading. So Intel closed at 1985. I mean, you can do this yourself, of course. Wow. There's no that poor stock. There's nothing below where it's been really. So I don't know. Put an order in to buy Intel at 15. Put an order in to buy Intel at 12 and a half, 13. When the sell-offs come, they'll sell out the stocks, it'll come down, and you own it. And when it snaps back to 20, you can hold it or sell. Finger on NASDAQ, it will halt if it goes outside the volatility index. I don't know if NASDAQ halts, but I've never seen them halt finger yet. But you might be right. I don't want to contradict. All right, so there, I lost all those questions above Chris Decker. Darn it. I lost them all. So I'm not putting them up because they're gone. All right, Augustine. What is Ham's X name? I always ask this. Just search by finger FNGR, and you're going to see him come up. I think it is 59591 short killer, something like that. Buy oil, Israel hit Turkish forces. Israel doesn't have any oil. They want to take the oil from the Palestinians in Gaza Strip. They want to take the oil from Syria, but they don't have any meaningful oil right now. So Turkey will destroy Israel if they decide to fight back. I don't think it'll affect oil prices that much. Gold, maybe. That's my reaction. I may be wrong. I may be wrong. How would a gold silver squeeze look? I don't think you're going to have a gold squeeze yet because there's too much. The gold is in the central banks. The gold is in the bullion banks. It might have been leased out multiple times. There might, Germany, for example, now wants its gold back. Odds are that the pressure from the United States to keep the dollar strong, that a lot of the Western central banks lease their gold out multiple times. So to try to make a specific example, if this is a bar of gold and it belongs to France, but it's in the Bank of New York's vault, the Bank of New York might have leased it to the Bank of Japan, China, and it might have leased this to the Bank of India, and it might have leased this to the Bank of uh, Poland. And it may have done it more than that. So even though this is in New York, it doesn't belong to Germany because, I mean, contractually it does on paper, but the Fed has lent it out so they can't get their hands on it to give it to Germany. That kind of situation, if it unwound, gold could go to, well, it wouldn't be pretty. Gold would go up 10, 20, $30,000 an ounce, but only part of it would be because gold's going up. It would largely be that the bullion banks are collapsing and taking the US financial markets with it. I don't think they're going to do that. There is gold in the Western banking systems, but slowly the physical gold is being borrowed and moved to the east. So slowly they're going to come to a point where it's a problem, but I don't see the squeeze coming in gold. Where I see a squeeze happening is in silver. Now, I think there could be a squeeze in gold later. I just don't see it happening right now. But silver could, I think a squeeze in silver could happen tomorrow morning. Will it? No, but it could happen at any time. The demand for physical silver exceeds the availability of physical silver. There isn't any physical silver sitting in Western, or at least of meaningful amount, sitting in Western bullion banks or Western commercial banks. JP Morgan runs or controls SIL and I think it's GDX, and to that extent, they may be able to manipulate the silver in that ETF a little, but there is no way that the Treasury can call the Bank of Poland, the Bank of France, the Bank of England, the Bank of Italy, and say, if you don't help us out, you're about to get screwed. There just isn't a method. So, what would it look like? I think what would cause silver to squeeze once it goes through $50 an ounce. I think silver will go to $100, $120 an ounce with the speed of a comet. Silver will be very volatile. And so if the stock market goes up to these highs and then crashes, silver could come crashing down. So those are two different scenarios. That's what I think is going to happen with silver. But what could happen with silver is that in London, I don't know, pick Martin Marietta. I don't know. Do they build those missiles that we're bombing Yemen with, that we're going to run out of? Apparently, each one of those missiles has a monster box of silver in the front. Maybe it's Northrop Grumman calls and says, we want delivery on our silver, and it won't be there. I don't know how close we are, but we're very close. Last time I heard, there's something like 250 million ounces of silver floating in the Western banking system. 250 million. And there's 800 million of silver demanded ounces every year. There's 800 million ounces produced every year. So there's this little buffer of 200 to 300 million ounces. But as silver goes up and demand goes up, a lot of that silver is moving to the east, where it's never going to come back to the Western system. And as I don't know where to track that until it's in some headline, some analyst starts talking about it. I don't know where to track it. So I don't think it's going to happen tomorrow. It could, I suppose. But when somebody asks for their physical silver and it's not delivered, I think silver could open at 200, 300, and I think Merrill Lynch will go down first, but JP Morgan could go down, and silver could go to $2, $3, $4, $5,000 an ounce in a squeeze. It's going to be hell. But I don't give that a lot of odds of happening as long as that little buffer's there. But that buffer's not much. That buffer's not much. I think the silver squeeze is possible at any time. But I think it's more likely that it's going to be later on. Circuit breakers hitting Japan's market. Wow. Hopefully all hedge funds who have screwed retail get that. Yes, exactly. I told you that. There it is. There it is. Yeah, I didn't get it right at all, did I? At ham 59591 shorts. At ham 59591 shorts. Ham comes on the show. Ham comes on the show. Ham's his own free agent. But Ham comes on the show. I didn't call him before I went on at 8 o'clock, 8:30 tonight. Ham comes on. And you can listen to Ham on Twitter at ham 59591 shorts. 59591 shorts. Let's see if there's any updates on the live blog. No more, no further update that I see. I don't know where you're getting this, Japan. Let me look at Yahoo News. I don't see that's. So the S&P futures are only down 2.79 now. They could turn around by the time we open tomorrow. They could be flat. Anyway, you're hearing my message. I think sometime in here, it's over and we start going back up. I don't know where to get this news on Japan. Really, I don't. I'm at a loss. What to Google? Anyway, it's going to be a wild ride. It's going to be a wild ride tomorrow. When does London open? After us, right? London opens after we do, so it'll be. I don't know. I don't know. I've suddenly gotten tired trying to think what else I can. There were a couple of things I wanted to talk to you about, politics, but I've lost my energy. 3 a.m. tonight. London opens that much earlier than we do. I'll just go Japan circuit breakers. Japan market circuit breakers. Japan, the Nikkei 225 futures suspended. What it means. 1 hour ago, circuit breaker triggered in Japan for stock futures trading. Wall Street Journal. Forex Live. Nikkei 225. First domino. All right, let's read that. It's so provocative. First domino. This Iman Sheridan says, reminder, U.S. equity futures have a 7% price limit circuit breakers. It's not, I don't see it. Hong Kong's Hang Seng plunges 10%. Mainland China's CSI 300 slumps 5%. Nikkei plunges as Asian markets brace for further tariff fallout. Japan hits circuit breaker on futures trading as the Nikkei plunges 8%. German stock market futures down 5%. Japan's Nikkei down 7%. Japan's Topix down 9%. Australia's ASX 200 down 6%. Here are all the markets that hit circuit breakers today so far. China, Taiwan, Japan, Russell's futures, Australia, Singapore. VIX is up 14.62. A reason not to buy calls, there's going to be too much premium in those calls. All right, according to MarketWatch, Dow, S&P 500, NASDAQ on track for Monday plunge after last week's tariff-induced rout. The media is controlled by the guys that want to take your money, and it works. U.S. stock index futures fall sharply on Sunday night, pointing to a painful start to the week after last week's historic sell-off sparked by President Donald Trump's tariff measures. Hang Seng down sharply in tech-led margin call massacre. Finally, something that makes sense. A margin call massacre makes sense to me. Bank shares cratered. Japanese stocks down sharply after futures briefly halted by circuit breaker. Japanese stocks traded sharply lower, dropping 9% last week as Asian markets sold off on fears Trump's tariff measures will slam economic growth. S&P headed for worst three-day stretch since 1987 crash. Bespoke finds. Bespoke Investment Group has tallied the losses for stocks and come to an alarming conclusion. In the U.S. market, if the U.S. markets finish Monday's session at or around where funds were trading Sunday night, then this would be the worst three-day sell-off since the 1987 crash. Do you know what happened in the 1987 crash? That was October. Basically, after the margin calls pushed it down, the markets turned and we roared to new highs by the end of the year. Actually, sooner than the end of the year. I think that's going to happen again. The butcher on Wall Street says Asia in total meltdown. Well, it's possible. It's certainly possible. It doesn't show here on this headline, these headlines. But let's see, let's just do Asian markets. Hong Kong plunges 10%, China down 5%. Asian markets open sharply lower as Trump tariff shock continues. Asian stock markets crash. China, Japan, Hong Kong, and Taiwan top losers. The Herald Tribune. Asian stock markets witnessed a major sell-off on Monday after U.S. President Donald Trump announced a new round of tariffs. The markets opened with heavy selling pressure, reflecting growing fears over the impact of the tariffs on global trade and economic growth. Asian stock markets witnessed a major sell-off on Monday after U.S. Donald Trump announced a new round of tariffs. The markets opened with heavy selling pressure, reflecting growing fears over the impact of the tariffs on global trade and economic growth. Experts believe, who are they? That the continued sell-off in global equity markets is attributable to the rising uncertainty caused by tariffs. The new tariff measures have cast dark clouds over the global economic outlook. Major Asian economies, which depend heavily on exports to the United States, are expected to be hit hard once the tariff implementation begins. Investors are worried that global trade could slow down significantly, affecting corporate earnings and economic growth worldwide. I'm not impressed. I'm not impressed. Yeah, I agree with this. So you guys didn't have to tune in. You just had to call ocean sailing. The sell-off is too deep. What the? I don't know. The markets were correcting. I'm a little surprised how far it is. We're definitely in the 20% bear market, but I don't know. Do you think the Fed's not going to do anything? Maybe not, just to spite Trump. Vanguard said don't sell. Now that I mean, if it's just a bad recommendation, but if they're asking customers not to sell, that's a sign of real trouble. So, I'm giving you my reaction. There could always be something going on, which I do think there's going to be hedge funds. These guys aren't that bright. They just use leverage to get outsized returns. I think you should buy the dip, Jeff Kahn. I'm too tired now to come up with a list, but just to use one, SMH, which is the ETF for semiconductors. Put out an order at $100 at 150. People have been calling for a crash for years, and now people are surprised. I don't think this is a crash. I think this is a very sharp correction, which is going to provide huge profits to the people who are buying stock. I mean, sorry for this. All of my bosses used to use the same expression, but there was one sales manager who used to just tell me it's stock is just moving from weak hands to strong hands, from weak hands to strong hands, weak hands to strong hands. And this is not a crash. A crash would have to go rippling through 401ks as I sat at the dinner table tonight. It'll have to go through mutual funds. A crash will last a long time and it will wipe out wealth. To repeat, I think this is almost over with. I would put orders in on anything you want to buy under the market. You might get lucky tomorrow. You might get lucky Tuesday morning. I think Tuesday midday, Wednesday, it's over. They'll announce something. Emergency meeting. Fed opens the floodgates. Fed buys all it can. I don't know, something. Trump tariffs work in Asia. Trump reaches an agreement with Korea, China, anything, and it'll turn it right around. That's what I think is going to happen. Then I think the Dow could go, my opinion is 60,000 or higher. The S&P, 8,000 maybe. NASDAQ, 25,000. Russell, 3,500, higher. But once it gets there, I think the markets are going to crash. I think the markets, after they go to these unbelievable heights, I think the markets are going to crash. The 43-year bull market is going to have one more glorious leg, and then I think the markets are going to be very treacherous. They're treacherous now, even if they go up. But then I think wealth will be gone. And I think if you haven't moved out of the nifty MAGA 7 stocks, and if you haven't shifted your retirement accounts from the goofball that manages them out of Somerset, New York, you're just going to pay the price. And I think we have time before that happens. And by the way, when that crash comes, there may be another effort to rally it back up, just like in after the crash of 29. But that rally back up will never get back to the previous highs, and it'll give you a chance to trade. But then I think you're going to see, I don't know, a decade of just disappointing performance. But you know where and I want to try to come up with a way. I was thinking, how can I do that? Can I write a primer? Can I write write something? But I think I'm going to try to make a goal of turning 10 grand into $1 million wealth. Now, I'm not just talking about currency collapse. over the next 3 to 5 years. And I think where that's going to happen is in the extractive industries, and I'm not talking about your wisdom teeth. I think commodities, all of this stuff that the world is shuddering about, it boils down to one thing. We are going to, this is not English, we are going to onshore rather than offshore our economy. And that means iron, copper, lead, all the commodities, oil and gas. And it means mining shares. There'll be a lot of money. I know buy ocean sailing. I'm going to go to bed too. Hey, Leanna, good to see you. A lot of people calling this crash. I just think it's part of the movie myself. Yeah. You bought, you're going to be fine. What price did you pay? That's a nice trade. I would never sell that. If you had the courage, well, never is wrong. If silver goes to 90 or 100, 120, let's say by September, it could be sooner, it could be later, but quickly, if it happens quickly with the whole market, maybe you sell 100 shares. And if there's a crash, that means the whole 1,000 comes back down. Because I think that's what's going to happen. I think silver's going to go there. There's going to be a sell-off, like you saw on Friday. People had to sell their silver and their gold because everything was down. It'll be volatile, and maybe you can trade it that way. But man, I'm envious of your position in PSLV. If you can set it and forget it, that could be $100. What would $100 a share be worth to you? Yeah, 110,000. Well, we'll see. I think it could be $100 pretty quickly. It could be a lot more than that. I'm having a reaction to something. If we get new industry in America, we could get a boom. Yeah, we could. That's kind of you. Kind of you, kind of you, kind of you. Beautiful brown eyes. I'll never love blue eyes again. GTII. Well, noblesse oblige. Approximately 3 years ago, GTII did a deal with the Kramer brothers. The Kramer brothers shorted 50, 60 million shares that didn't exist. The stock started trading up. It went from 5 cents to something like $4 or $5, $4 and something. Reichman bought back the note. The stock fluctuated, and then in October it went to $9. So it went from about 5 cents to $9. A lot of people, including myself, did not sell because I thought the stock was in the middle of a squeeze. Fidelity had taken away the buy button. And Wells Fargo had taken away the buy button. Fidelity was paying 1,000% to borrow the stock, 1,000%, because of the warrant, the dividend issued as a special warrant. The criminals who operate out of New York paid off the CEO of COSM with the promises of a financing, a piece of shit company that just had contracts, but he's a Greek guy, international trades. They purchased Frank Benedetto, really an idiot, who takes care of his family by being an IR guy for these companies. And they purchased Lou Bravo. Those three of those guys, in the middle of all the excitement, got people to move their GTII over to COSM. May have been the right trade. Some people made money. COSM did, in fact, do a reverse split, did, in fact, sell stock to the shorts, did, in fact, collapse. And so most people lost their money. But what happened is the squeeze that I think was going on in GTI was punctured at that point. I didn't sell, but there's a lot of clarity looking back. Then the company still tried to do things to get the stock price up. The stock did rally again that next year a little bit, but not much. There was talk of merging with a law firm. A lot of activity, documents signed, press releases, talk of several different items, including the Treno mine deal. But finally, Reichman got bored waiting for his payday. So apparently, according to filings, he started taking money out, shares out. Maybe he was doing it all along. Maybe he was working with the Kramers and with you, noblesse oblige. Maybe Reichman, you, and the Kramers all worked together. He hired a derivatives guy out of Chicago fund. Only reasons there to help the shorts. The lawyers at Alpine filed a lawsuit against the very existence of FINRA. So the amount of money at risk for the shorts was very high, but also the amount of money they had to prosecute an attack against all of us also was very high. They were effective in getting GTII into the expert market. They hired a receiver whose only job is to clean up these shell companies. As far as I can tell, he works pretty closely with the residual of a lot of these attacked companies. I don't know. You start seeing shadows everywhere. GTII went to the expert market. I think it's worthless. GTII now has a guy as CEO who seems, pretty charming. And there's whales behind it. The receiver was able, apparently, to get approval for the removal of almost 200 million shares. He'll get 20 million shares of that. So you're going to have a reconstituted GTII, rough numbers. The receiver gets about $70,000 to $100,000 cash because of the cash he recovered. And the receiver gets 19 million shares, 20 million shares, roughly. The new company will have about 100 million shares in it, plus you give the shares to the receiver. He has 18% of the company, and then you're going to attract investors to bring in money. This guy has 18%, but you're going to bring in money to fund the company, and no one's going to complain about that. There are better shells out there. There's no reason for a company to come into the GTII shell unless they believe the bullshit that there's going to be a short squeeze. There will never, ever, ever be a short squeeze in GTII. It will not happen, as you well know. That's why you're here. Now, could the stock over time be successful, raising money from all of us? I'm sure they're going to raise a lot of money from us, because in order to steal something, the criminals need something to steal. And I'm not accusing the CEO. He seems like a great guy. Or the whales. I just think even whales don't know how big this problem is on Wall Street. There is no way I, as an investor, would work with GTII to bring in an asset. The receiver's getting 20% of the company, and you're hoping the short survives, and somehow there's going to be a squeeze. I think it's all asinine. But you can keep asking about it, you mother. I hope, noblesse oblige, the next time you look in the mirror, you see how ugly your soul is. What's good to buy right now for the short term? I think we have our 3 or 4 stocks, 5 maybe, that I think are going to do well. But this volatility, it might interrupt it. But if I had cash, I might go in and try to buy Finger this week. Just put a GTC order out, or do it each day. Try to buy some shares of Finger at $1 or at 90 cents. You might miss it, but maybe $1.10. But I'd go for it. 95 cents. I'd try to buy some Nixie and some GBUX cheaper. But all 3 of those, I think Finger, once we get through this volatility, I think Finger over the next several weeks can double in price. I think GBUX can have a squeeze. It's risky as hell, but I think GBUX can go to $80 maybe. Yeah, 80, 10x from here. But I wouldn't necessarily wait all that time. But we'll see. Nixie can double, but it could also go up 10x. Anyway, those are the speculative ones. They're all speculative, I guess. Railtown, I think, is so cheap right now. I think Railtown is a merger candidate, and I think Railtown can give you 10x at some point, very soon. There's some risk, all this volatility, but I think Railtown goes to 3 or 350, maybe within 2 weeks, 4 weeks. Anyway, those are those stocks. I think silver is, depending, you want to do it for the short term. Silver, I think, is volatile, so you probably shouldn't do it if you're looking to get your money out for the short term. if you know how to, I don't know what the indexes are, but if you could buy calls on almost any ETF in the market, I think the stock market's going to rally. And I just wish I knew how to play the long with calls, how to play the Dow or the S&P or the NASDAQ or the Russell. I'll try to figure that out by tomorrow morning. It's been so long since I traded options on the indices. But out of all of that, Leanna, I think the one, if I just wanted to pick one that you could almost just not worry, it would be Railtown, RLAIF. I mean, there's risk. They've announced a merger. It has to get approved. So if it's not approved, that opens it up. But I don't want to go through the whole story again. But I think there's a R&D company that's now selling its product that stumbled into a merger situation where there's going to be a revaluation of the company from 30 cents, to some much higher number once the news is out. Once the approval comes, there's a buildup of buyers there. Now, will this correction in the market mean those buyers step away? I don't think so. But if this pullback turns into a depression, yeah. But I just don't think that's going to happen. So just to say it, silver's at $30 roughly. I don't think it'll be at $30 very long. I think silver in very short time frame can go up by 4 times. It'll be volatile. And, silver's something, even though you want to buy something for the short term, just like I do, silver's something I think we have to start thinking about, you know what? Let's just buy it and let's just hold it and see what happens. Leanna, I will try to come up with some mining stocks that are lower priced, but I'm not sure where we are quite yet in the precious metal cycle. It looks like to me gold has to keep moving for silver. I don't want to be contradicting what I just said. If the markets catch fire with liquidity and the Dow goes to 60,000, silver's going to go to 100 or more. That's separate from what I'm about to say. For advisors to start talking about silver, gold, I think still, believe it or not, still has to go higher for all the lemmings that advise money to start telling people, we think you should own gold. It'll be 7,500 before everyone's buying it. So anyway, I think as Wall Street starts to talk about precious metals, which they'll start calling all their clients. I think it's going to be about gold first. That's what I think. Then there'll be some talk of silver, but then silver. Then it's going to be the blue chip miners like the Barracks, the Newmont Mining, and none of them are blue chip yet. That's the wrong, the premier ones. It'll be Silver Wheaton, which is now called Wheaton Precious Metals. It'll be Agnico Gold. It'll be Franco-Nevada, Aramis Gold, and there's some others. There's some other names. Those will start moving first, and then the money will come into the middle level. Another thing to trade right now, although I would not hold it long term, would be you can buy SIL for silver, GLD for gold, but these are ETFs where everything is manipulated paper inside, but they'll trade up. The junior gold index, I'd focus on the bigger one right now. Anyway, if I had to pick one thing out of all of this as a stock trade, I think I would pick RLAIF. It may not have the excitement of a squeeze of some of the others, but I think it's a 5x, 10x, and maybe more move sometime soon, which is unpredictable, but it's all in the news. And if I had to pick one thing, if you're trying to rebuild your net worth and you just don't want to worry, you don't want to think too much about it, you have a life, silver. Buy as much silver, physical silver, as you can. So you have 2,000 shares of PSLV 1027. That's great. I'd keep calling. Bye, Donna. Lost money with GTI. I def not working with any of them. Whatever. I don't believe you. Yeah, I know. Thank you, Leanna. Alan 10x. Is it worth maxing out credit cards to buy silver? If you can pay the interest on your credit cards, I don't know your situation. Sorry, I wouldn't do it. I'm too old to do it. But if I were younger, I might consider it. You're going to pay 20, 30% on your credit cards. I mean, it's kind of a stupid trade, CC. You're paying 30%, let's say, on your credit cards. And hopefully you stay current. You don't have late fees. Silver goes, I mean, it could work. You buy silver here and let's say by September, October, silver's $100, or let's say 120. You've tripled or quadrupled your money. You could sell a third of your silver and pay off the credit card and put some cash in your pocket and keep the rest for free. So yeah, but I think it's a really expensive source of money. If the rally doesn't happen right away and you don't keep up on your credit card, the fees can add up, your credit's ruined, and it could be 2 or 3 years. I mean, if you want to be doom and gloom, and you need silver to. I don't know. It's the riskiest way I can think of doing it, but I used to drive a Scirocco, and why not go 80 when you could, or 85? I think a finger squeeze is more imminent. Yeah, I mean, there's a lot of argument for why a finger squeeze can happen. I believe squeezes occur with a surprise that no one's expecting. In the case of silver, gold, I don't see a surprise. It's going to be managed. It's going to be, uh, I mean, if you want to believe that China has it out for us in more than a passive aggressive way, maybe they could announce something right away, or Russia could. But I don't see that. I think they'll work together on the financial system, and gold will be reset at price, and it'll be controlled. It can get out of control. Remember, with gold, the physical gold is being leased out by the idiot Western banks. It's being purchased by the East. And you could get to a point where they stop that game and there's not a lot of gold left in the Western system for us to buy. I don't think we're there yet. And I think it's to me, an interesting wild card is China's in financial difficulty, at least vis-a-vis the Western banking system. If they want to opt out, they've got plenty of gold apparently, and factories and all that. And if they're going to come up with a system with Russia and with Iran, maybe India, well, maybe there's a way to just get out of the Western system. But I don't see that as happening. So they may have to sell gold to stay in good standing in the Western system because of the debt. But these things, it's just, they have a lot of cash too, so they may not have to sell their gold. Anyway, you can get lost in trying to figure out every single different angle. But it boils down to, with gold, that I think the Western banks can still manipulate the movement of gold and the leasing of gold and the pressures of gold, and there is a lot of gold. So as the price goes up, there's a lot of gold. So I don't see gold as necessarily having a squeeze right away. I don't know why I'm answering this on finger. But silver, I do see that. Silver could have a squeeze. Silver could have a squeeze. And I don't know why I got off on that as it relates to finger. With finger, you do have, apparently, and I saw it with my own eyes for 10 days, you do have a huge, I know why I got off. I switched over to gold and silver. To me, in order to get a squeeze, you need a surprise out of left field. I don't think gold has one of those as a surprise. Silver might, with a failure to deliver on the London Metals Exchange. With finger, you need a surprise. To me, that it's not just finger, any short squeeze, which could just be buying. All of a sudden you could have a lot of buying and the stock prices up, like we saw in Magoo, or some of these other organized buying that somehow happens when we sleep. But with finger, I don't know what that surprise is going to be, Alan. Is it going to be that the C2, the vehicle contracts, get even bigger, yeah, that's great news. It could happen. But where's the money going to come to fund it? So I think that contract is going to grow really before our eyes, but Finger doesn't have the money and they really don't have the expertise to build an assembly line of vehicles being installed with this, whatever it is. They have to hire people. So to me, if that's the news, what would be great is if SAIC said, you know what, we're going to front the money. Or, you know what, we're going to joint venture with you and we're going to build all this out in our factory. We just want X% of the company. Or, you know what, we'll let you use our credit lines. Or, you know what, we're going to do all this work, supply the vehicles and the labor, and we'll bill you in the future. Once Finger Motion goes from 2 vehicles to 20 to 200, and it gets in the cycle of the government's buy the vehicles, install them, takes 40 days, 45 days. Deliver them, takes 90 days from then. So you're out 120 days before the government gives you cash flow back. So even if the margins are 40%, you still need new money for the next order. And you've got to do that probably for 4 quarters, maybe 5 quarters before the money's coming in, pays for the next orders, and it's all self-funding. It's hard to explain this, but Finger Motion has to go from having enough money to do 2 vehicles or 20 vehicles to doing hundreds of vehicles a quarter, and then getting the cash flow from payments coming in so they don't have to keep selling stock. Last time they raised the money in December, Roth Capital screwed them because Roth Capital did not behave as an investment bank. They just passed through the money to the shorts. And that's for 20 vehicles or I don't know how many. We haven't gotten the news yet. But if Finger Motion has to do that again with Roth Capital go to the shorts, help out the shorts, because the shorts is how Roth Capital gets paid. But hopefully Finger Motion continues to get these contracts and it expands. But what the surprise would be is if there's an SAIC, whatever the name of that company is, joint venture in some manner. Or the surprise would be that the funding is already set up, or that the government is going to give them the project financing to do this. Anyway, any surprise like that would send the stock much, much higher, much, much higher. It could go to $6 or $7. And if Finger Motion can, I'm making the numbers up, if Finger Motion can go to $7 and stay there, never come down, you know, a little bit of fluctuation, that'll put pressure on the prime brokers. And then you could see buying of Finger shares to settle the trade. That's one example. Another would be if the what do you call that? Cloud computing. The cloud computing suddenly came through with a massive contract because they have a lot of capacity. That's repeatable. Not a one-off. A one-off isn't going to do anything, but something that is repeatable, and that could change everything overnight. And there's so little effort involved. If they suddenly got I don't know, $20 million cloud computing contract, and it would be renewed every, I don't know, 90 days. It doesn't take up a lot of brain power and manpower, women power. That would be huge. That could shock the shorts. The insurance business that they have, we've read a few things. The business in China is a $3 trillion insurance business. I would imagine if you looked it up, the United States has a much bigger insurance business. And our economies are the same size. So if the insurance science that they've been working on with with Munich Re Life and Pacific Life Re and Munich Re, these numbers could be huge. And if the market could project into the future and discount those future earnings, that'd be a surprise. So in order to get a squeeze, I think you need a surprise. Secondly, or all by itself, higher stock prices cause squeezes. So if there's a dramatic new bit of information that brings in buying, or if buying comes for some reason we don't understand, and so finger motion's price is higher, that can trigger an avalanche upward. But Alan, I think the more likely path for finger over the next 2 weeks to as much as 2 months is going up, pulling back, going up, pulling back, going up, pulling back. Now, finger motion is getting close to its fourth quarter earnings release, which should be on or around April 15th. I think that has the potential to meaningfully change the story for the better and the stock price for higher, which is why I've been saying for the last, 2 months, that I thought finger motion could double or triple, that it could go $3, $4, $5. In the short run, though, I think the charts show that finger can go to, I'm not going to make it up. I'd have to look again because it's pulled back now. But I think the more likely target would be around $2, $2.20, $2.40. And with some good earnings news, maybe it can get to $2.83. But the shorts will come in. They'll keep coming in until it is resolved. How is finger motion going to pay for the very valuable contract they have to build out these vehicles? So I don't see finger squeezing imminently. I think it can, but I don't think it's imminent. I think GBUX, as of Friday, looked like it was on the verge of something, and that could still happen. Remember, GBUX doesn't have toxic financing out there that I know of anyway, so that on Monday or Tuesday, while everyone else is going down, GBUX could be going up because those trapped shorts down in Florida or wherever the hell they are have to buy in all their shares. So GBUX, I think you could see, GBUX to me is the only one out there that could get, in the short run, I'm talking about in a matter of days, give us that. And that's Ham's idea. That's Ham's idea. Ham brought GBUX to you at 70 cents a share. And he talked about it for weeks. It's up 10x. I think Nixie has the same chance of squeezing because of the news that has to follow on, because of the activity that showed up in the stock at least twice before, where it went to 50 million shares traded and it ran up pre-market and during the day. But in that story, I think the fact that they tried it twice before, whatever tried it means, and it didn't, it ran to 8 or 10 and pulled back. Nixie is more. GBUX and Nixie both, in my opinion, they seem to want to go up. GBUX, if it goes up, I think it will go up. Nixie, if it goes up, I think it's 50-50 if it really goes up. I don't know how to describe this, but let me use numbers. Nixie's $2. I think it could go to $25 if it takes off. But at the same time, if it takes off in a lot of volume, it might only go to $6 because of that spinning of the wheels. So I'd say 50-50 on that. Rail F could squeeze, but it'd be sort of a shorter squeeze. But I think Rail F, you don't even need a squeeze to get 10x. Most squeezes that I studied, if they were in the list of 10 biggest squeezes, 20 biggest squeezes, 50 stocks that squoze, they usually went 10x, and sometimes they went 100x, sometimes they went more than that. But I think with Railtown, you can get 10x even without a squeeze. I just don't see Finger going 10x, as you say, imminently. I'm not saying it couldn't. I just think it's going to be more of a slog, more of a buy the dip, sell the rip kind of chance. Finally, on the earnings, if they announce the earnings in 2 weeks, approximately, Finger Motion, if in the body of those earnings, Finger Motion is turned positive, that's going to be great. It's not necessary for the news to be good. What's necessary for the news to be good on Finger is that analysts, you and I, can read the fourth quarter report and extrapolate that their 2026, which we're in right now, they have growing revenue, growing cash flow, and growing earnings. And that ideally, that every quarter is going to be positive in terms of earnings. That would make the shorts run away like a cockroach before a spray of raid. So anyway, I want to move on from that subject. Okay, so XRP, XLM, XDC, these coins are going to go to the moon. All right. I am not at all sure that these coins are going to go to the moon. I like them. I like XLM. I don't remember XDC. I like XRP. XDC sounds familiar, but I don't really remember it. But in terms of a alternative payment system, based on, wow, XRP, it's cheap and everybody's going to use it and it's going to replace the dollar. Even if that's so, I think there could be false starts. I hope it just happens. Just turn the page and life changes and hosannas start playing out of the heavenly skies and the bluebirds are singing and the deer are playing with the wolves and everything is glorious, just all one day. But I'm not sure that's going to be the case. In fact, and I'm trying to think where I can show it to you, and I'm too tired to look it up. China is more likely to create its own digital coin for payment system with the renminbi, which will just leapfrog past the XRP. If the XLM is the one I'm thinking it is, about, if it's the Luna, is that the Luna? I think it's Luna. The one that really stands out to me is the one that creates contracts. And basically you could wipe out all the investment banking in a fantasy. Just get rid of them all. The contracts could be in the coin, and then you could just use that over and over again and get rid of all this. I like that one. I know I didn't explain it very well, but I'm tired. The other one that's that dog out of Japan, that coin I really like. I don't think anybody can make any money on that coin, but I love the idea. So that guy that wrote the book, Yanni, talking about micro capital, that Bill Clinton got all, it boils down to that in Africa and India, if you give the men the money, they're going to drink it or whore it or gamble it. If you give it to the women, it's going to be so much better. Which I think is fine as a theory goes. I just think all human beings have their foibles. But I love the idea of leveling the financial markets so somebody sitting in Timbuktu has the same access to capital as somebody that goes to Temple with Jeff Easton or Jeff Kramer. I like that everything gets level. I have 500 XRP, wish I had more. Well, start sounds like you have more than one thing in your portfolio. Start prioritizing what you want to own. Start trading. Stop. Trading has risk because you can miss out. I agree. But start having a little courage. And maybe I just need to show you my IRA. I don't know. I don't want the criminals out there seeing my positions. But as you may know, my largest stock position is Logic. I'm just written it off. I think I'm just not going to, there's no trading. There's nothing to do. But I have some Railtown, some GBUX, and some Nixie. I'd like to have XRP. I'd like to have some mining stocks. I'd like to have I'd like to have Finger. I'd like to have I don't know. I'm not remember silver. I'd like to have. So I'd like to have all these, but I have these three. Well, the way my balance is, I'm skewed towards RLAIF. Now, if GBUX were to go up, and we're facing this correction right now, so it throws cold water on all these stratagems. But if GBUX were to go up this week, I would have taken, and it still could, I would have taken that small amount of money and add to Railtown. I mean, I could add it to Nixie and Finger, but I think the time frame for Railtown to 5x or 10x is sooner than Fingers. I don't know about Nixie. Nixie could do that. Anyway, I don't have that problem yet. But if GBUX went up, my point is I can start adding to where my priority is. And in your case, you want XRP. Well, if I don't know, I'm not telling you to get GBUX, but as an example, a friend of mine called me up. He said, "Well, why don't you sell a little bit, buy some Nixie? Nixie can go to 20." Well, I have to decide, do I believe it can go to 20? Do I think it's going to do it quickly? And if I do, well, then maybe I do put that position there. If it works, all of a sudden I've got the money to buy XRP. I'm not doing a good job of describing how to do it because I'm just knackered. But my point is you can get active in your account and try to build some of these positions. I wouldn't get impatient. 500 is going to be enough for you. But you can't add, you'd be surprised if you make it a strategy, I guess is what I'm saying, and work on it each day. Most days you won't do anything. Most days you won't do anything, but sometimes you have to sell something that you really like. Like, for example, you have 500 XRP. I'm not telling you to do this, by the way, because I'm kind of 50-50 on Nixie actually achieving a breakout. I think it's going to go up, but I'm squishy on it whether it breaks out. Finger, I think, is going to go up. I just think it's going to take time before it breaks out. But as an example, I'm not saying this, but if you did believe in Nixie, you might say to yourself, well, you know what? Nixie's under $2. I forget what. $1.60 or something. I think it is going to go soon. They've got this news and all that. And so I'm going to sell my 500 XRP, buy 500 Nixie. And yes, I hate it. I really want to own XRP. But I think Nixie's going to, quote unquote, go in the next 2 weeks. If it does, I don't know, instead of going to 20, it just goes to 10. You can sell it and you can buy 1,000 XRP. Now, I'm not saying to do that specific trade, but as you get more comfortable with each story, you're going to know the inflection points and you can make some of those trades. In other words, don't be so, and I do it myself. I get so frozen. I want to own X amount of GTII in case it goes to, it's going to squeeze, and I can't sell it here because I don't have my full position. It's, you get caught up in your brain can cause you to lose, or your heart, I guess, I don't know, can cause you to lose opportunities. I didn't hear, I was at dinner, I didn't hear his call. I think GBUX can go tomorrow. I didn't hear Ham's reasoning. GBUX traded extremely well on Friday. With the caveat that the whole market looks a little treacherous. I personally think the market's going to turn around. But I think GBUX, if I understand the story, had one or two shorts, stupid shorts, short the stock. As you know, it went from 70 cents to $10. They got it back down under 2 or wherever, and they breathed a sigh of relief. Well, now it's back to $8. They don't have the ability to drive it back down. And in my opinion, and the prime brokers are feeling liquidity issues, and the possibility is that these shorts themselves are in trouble elsewhere. The point is, I'm not sure they're going to be given the free credit to sell more shares that they haven't located. We'll find out. But my biggest guess is that the prime broker who's extended credit to these 2 criminals is going to ask for their money Monday. And yes, I think GBUX could. To me, GBUX is the story there that has the surprise of the stock going from 70 cents to $10. Out of the blue, the shorts didn't know what hit them. Then they announced 200 million in definitive. I don't know if it says definitive, but it looks like the financing has been quantified at 212 million. I don't remember the press release exactly, but it's not going through Wall Street, and they have other things. So you know that GBUX is going to have the money. The risk is the stock is trading at $600 million in market cap. But the definition of a short squeeze is that the price of the stock levitates beyond the fundamental story. And yes, I think GBUX can squeeze Monday or Tuesday in the face of the market sell-off, if a sell-off comes. I think GBUX looks primed to be the one short squeeze that we caught. And it's Ham's idea, and Ham brought it to us early on. So yes, I think GBUX could squeeze tomorrow. Good for you. Good for you. I think that's the one. I think COSM was a scam. Yeah, I think GBUX is. I mean, if I had to pick one that's going to be a short squeeze, I think GBUX is it. It's got the surprise, it's got the higher price, it's got the trap short, and it's all happened in a short period of time. So I think it's there, but we'll see. And low trading volume. Just an idea. Oh, for the credit card? Yeah, I know. I've done things like that. I have. And if I were a young guy, I'd think about that too. I have one credit card, get a second card with 0 for 18 max. Well, if you do that, I don't know the amount on your credit, but if you, I always open a notebook and make notes, and then I lose it. So I'm not the most I need an assistant. I'm not the most efficient at that record keeping. But if it is something, so now what I would consider doing if you're young, if you don't have a lot of dependents, if someone would give you credit as you describe it right there, I would go take that money out and buy silver. And I wouldn't trade any stocks with it, but I would buy silver. I would commit to myself that I'm going to make the payments on the card for 18 months or whatever you're saying there. And, if silver goes from 30 to 120, I'd sell enough to just pay off the credit card. I know the temptation will be, well, just let it ride. I would pay it off, and then the rest is for free. And if you want to really try to create wealth out of thin air, which is what you're doing, you're taking credit from the Russian mafia, basically, on the credit cards. You're buying silver. If it runs to 90 or 100 or 120 right now, maybe just sell it all. Pay off this credit card, keep it in the freezer. And then if silver pulls back, put all that money, minus what you pay to the credit card, put all that money back into silver, and then just hold the silver. On that issue, I think one of the things we can all do is get out of debt. If they give you 0% for 18 months, and then you miss 2 payments and it's at 30%. Just imagine what the banks are doing to you. Joe Biden's Delaware. They lend the money to you. Capital One has 3 office buildings crowding each other out, because Capital One will lend you $250 out of thin air on a credit card, but they charge, I'm making it up, they charge you $60 to open the account, $60 to annual fee, and then they charge, if you're late, $35 late fee and $35 over limit fee. Before you know it, Capital One has lent you $250, but they've made it all back in fees, and they lent you the money out of thin air. And they actually have a strategy. They're one of the ones that figured this out. Rather than give you a credit card with a $2,000 limit, they'll give you 4 cards, each with $250 for $1,000, because there's more fees. They can quadruple the fees. If you try to do this strategy and it works, pay off the credit card, don't do it again. And each of us should just get out of credit card debt. It is slavery. It is slavery. And if you want to be independent in your life, one thing is to spend less, but do not use credit cards for anything that is a desire rather than a need. And needs, you got to stop needs. Breathing, insulin, and that's about it. You don't need to use your credit card to buy food. You don't need your credit card to buy dinner. You don't need it to buy a shirt. It's very hard, though. It's very hard. But they're lending you money out of thin air. They're maxing their fees, so they have no risk on the money. And you go buy, I don't know, you take a girl out and you buy a $150 dinner, and you give a tip, 35, 40 bucks, $200, and she's jamming somebody else anyway. So you got $200. The interest is 30%. So you're paying $5 a month just to carry the $200, and then you're late in payment. So there's 35 more. And then you're over limit, there's 35 more. And then there's the annual amount. That dinner gets really expensive. And she's having fun with the other guy. Well, yeah, this idea of backing with gold, they might do that in China for a while, but they'll run into the same problem the United States did. They won't want to give up their gold. That's the problem with the mercantile system. And that's why I don't think we'll go back to a gold standard. But we will have destroyed trust in the current financial standard. So what do? You use gold as a blend. So maybe it's 40%. I heard that the 40% was some number that came up from Isaac Newton when he was the exchequer of the Bank of England, for the British Empire. There's no magic at 40%, but you could have some number that anchors your currency. But they'll start with that. I don't think it'll be very long before they discontinue it, just like Nixon did to the dollar. Alistair MacLeod was trying to explain how, and I'd have to listen to it again, how if basically, as he says, gold, and JP Morgan said, gold is money, everything else is credit. But what we do in the United States is the Fed issues the credit and then manages the economy for unemployment and interest rates. Let me see. They don't issue the credit. The government issues the credit, but the Fed buys the credit, which puts money into the system. So his argument, and I got to try to really listen to it again. His argument is you should have the Fed, the Treasury setting interest rates, not the Fed, based on the amount of gold, using gold as a what do you call that when you do a credit report? It's sort of the government's credit worthiness, I guess. Anyway, I would have to listen to him again to more easily describe that. I thought I got it, but I'm not sure I did. But my point is, a gold-backed system is not going to last. It just doesn't work. And China won't want to give up their gold. They may start it out that way because in China, as my client told me, they used to say that the US dollar was the gold buck. It was as good as gold. But it was for a long time. But Nixon was tired of seeing the gold go to France, and so he stopped it. All right, I'm going to end on Steve. Steve, pull the trigger. Pull the trigger. I mean, you should. If you were doing it Friday, you should have done it Friday. But do it. I mean, do it You probably could have done it over the weekend, but do it first thing in the morning. Just pull the trigger. Unless you need the money in the short run. If you need the money in the short run, don't do it. But if you can wait, you're going to be so happy you did it. If you buy 500 ounces at 30, 15 grand, it'll probably be more like 16. I'd say within 3 months to 6 months, that possibly could be worth 62.5. You sell it then. That's a nice move. But I think if you can set aside and ignore it, I think and you're going to say that's too long to wait. I think it could happen a lot sooner, but let's say by 2000, let's say 5 years from now. But I think it could be much, much sooner. I don't know. It could be worth 175. It could, and for me, I think it's going to be worth 500,000. I think in your long-term planning on silver, you should think $1,000 an ounce, long term. Anyway, I'm dead tired, so I'm going to sign off. I wish everybody peace and a good night. I'll try to get up early. Yes, I think GBUX can have that could be the most exciting thing. And let me just see if there's an update on how the market is trading. My feeling is the futures will, the futures by the time we wake up will be flat. Oh, markets are open. Oh, that's wrong. Yeah, futures are still down. Futures are still down. Anyway, I'm going to sign off. Peace to everybody. Catch you on the morning. Catch you on the flip side. Ciao.